Welcome to CEO Insights. I'm Marilyn de Guzman with investingnews.com. I'm speaking with Bruce Lane, Executive Director of GTI Energy. Hi, Bruce.
Hi.
Well, let's start a conversation with just sort of highlights of the uranium market that's been happening, and your take on what's going on in the market, the soaring prices, and what traction you're seeing from investors as a result.
Yeah, look, there's a lot of people commentating about what's happening in the uranium market, and I guess it's kind of obvious that we've gone from $50 or $60 up to 100 or around 100 in a very short space of time. And so, yeah, that's obviously very encouraging for the company. And we're also seeing term price rising, although obviously it's not so transparent. So those are all obviously really important and supportive things to the company. I think the sort of projects that we're working on, around sort of $65, $70, they make really good money. So, it's great if it goes higher. It probably doesn't need to go higher from a fundamentals point of view for us. So we try not to get too tied up in what's happening in the market, but obviously, it is important that that's happening, and it is very positive.
Are you seeing investor traction in terms of like investing in the resource sector, mining sector?
The answer is yes, and that's a qualified yes. I think, we're an ASX-listed company. Most of our investors are in Australia. We do have investors in Southeast Asia and North America as well, but particularly the retail investors have been a little slow to get back on board with the uranium thing, and I think it went really well in that period in January when the spot price went above $100. And it's only come off a few dollars, but the investor sentiment seems to have been cautious since then. So I think they're still waiting for something else. But certainly on the institutional and the smart money side, the people who really understand what's going on the market, there's a lot of interest, and we're getting traction, because we've got pounds in the ground, and we've got that credibility that we're not just an explorer, we're a resource developer. So we are seeing quite a lot of interest, yes.
Let's talk about your projects. You have projects in Wyoming and Utah. What are the sort of overview? What makes these projects compelling, and what progress have you made on those?
Yeah, look, we've got two main areas in Wyoming, and we've got some projects in Utah. So the Utah projects are conventional projects, uranium, vanadium, and we've really sequenced those behind the in-situ recovery uranium projects in Wyoming. And of the two project areas in Wyoming, our lead project is our Lo Herma project. That's about 10 miles away from Cameco's Smith Ranch Highland. And we have a historical database we used to create a resource last year. So there's 880 holes already within the land package that we were able to use to create a current JORC-compliant inferred resource of 5.71 million pounds. Now, we think that to replace that, to recreate that drilling, would cost us well in excess of $10 million, probably closer to 15, and we think it would probably take us, at least 3 years, probably through the cycle to be able to do that. So we were able to do that in a space of about 6 months. So we think that's really put us ahead of the game there. And so we've got, we achieved a lot last year during 2023. We started the year with no resource, and we finished the year with a little over 7 million pounds of inferred resources, because we also put a resource out on our Great Divide Basin projects. So having that as a kind of starting point, if you like, at the start of 2024, what we're able to do is then, we did a bit of drilling at the end of last year just to validate that historical data, and that was very successful and helped us to understand some of the opportunities in exploration, both at depth and along trend. And so this year we're looking to drill in July, and we'll drill a larger program and look to upgrade the total amount of resource, but also bring some of the resource into indicated category and get us set up for a feasibility or prefeasibility or a PEA study. And so that's our focus for this year. If we can also drill on our Green Mountain project, we might do that. We're permitting a program there. We did a geophysics survey last year. We've got about 12 miles of uranium mineralized trend and some historical drilling. So there is a real opportunity there, but our focus is, very much on Lo Herma and to accelerate progress with that. And we think what that does is sets us apart from the other earlier stage companies in Wyoming. There's really no one out there that has a resource at our stage. There's quite a few starting their exploration journey, but we think we're well in advance of that. And so we think we're the only ones that we'll call a resource developer that sits between the producers and the explorers. So we're really looking forward to getting some more holes in it and upgrading it and expanding it.
I'd like you to talk briefly about in-situ recovery, which you mentioned earlier. There's a lot of positive feedback about this process. Could you, for investors that are not too familiar with it, could you just provide sort of an overview of what that is and what makes it compelling proposition?
I guess there's a couple of obvious reasons for it to be compelling. One is on the cost side, because the process doesn't involve digging the earth up. You're drilling holes in the ground and then using a leach solution within the subterranean ore body to liberate the uranium, and then into groundwater, and then it's lifted to the surface, processed, the uranium's taken out, the water's treated, cleaned, and put back into the ground. So we're not shifting dirt. The leach solution does all the hard work, a slow kinetic leach underground. So the two parts of that are really compelling are, one is it's cheap because you're not shifting all those tons. You're not using diesel to shift those tons. And you're not disturbing the ground to any great extent at all. It's a very light touch mining. It's almost kind of the perfect kind of mining. So from an ESG or a sustainability point of view, it's an excellent story. But it's also an excellent story from a cost. So low capex. And then also the operational cost is low because you only need a small number of people to run what is much more like a water treatment plant than a mining plant. So there's a lot of compelling reasons to be looking at that as a style of mining, and especially if you're using an alkaline leach, because the alkaline leach tends not to liberate heavy metals and other things into the water. So it's a really clean process. It's really oxygen and carbon dioxide or baking soda effectively. So so we love it. The geology has to be right, and the hydrogeotechnical setting has to be right. You need grade and thickness. You need good thickness and good permeability, and there's a few other technical things. But if the project is amenable, it's an excellent way to mine. We certainly believe it is anyway.
So we're here at PDAC. You're speaking to investors, and you've done a good job in sort of providing an overview of your company and your projects and the prospects. You're talking to an investor. How would you summarize, GTI Energy and why your company is a compelling investment opportunity at this time?
Yeah, look, I think, as I said before, our project sits between the explorers and the producers. And what is really interesting about Wyoming is, the uranium industry in the US has really been on its knees for a long time, and it's just coming back to life. Energy, which is producing now, is about 15 miles away from our Thor project in the Great Divide Basin, and they are considering moving on with their Shirley Basin in-situ satellite project, which is around 8.8 million pounds. And as I said before, I think also that we're about 10 miles away from Cameco's Smith Ranch Island. That's the largest permitted in-situ recovery facility in the US. And then we're just down the road, like 40 miles from Energy Fuels and from UEC. Now, UEC have said they're going to get back into production in August of this year. And then we're about 100 miles from where Peninsula Energy is, and they're targeting production at the end of the year, probably around December. And then we're also about maybe 110 miles from Encore's Dewey Burdock, and we're not far from their Gas Hills project as well. So we have these major players around us who are all either they're either back in production and ramping up, or they're getting back into production. And so what we're looking at is a scenario where those producers are looking for long-term supply to their mills to service long-term uranium contracts for US utilities. So we fit into that really nicely. We don't believe there's anybody else who's advanced on the exploration side as we are. We also think our value is attractive at the moment. We have over 7 million pounds of uranium, and at the moment our market cap in US dollars is probably around $10 million. So, we're getting valued at not much more than $1 a pound for a product that now is arguably worth closer to $100 than it is to $50. So the in-situ value of the pounds that we have in the ground at the moment at 7 million is, it's kind of $700 million worth of product, and it's kind of hard to reconcile why we're so cheap. So we think there's an opportunity for investors to get involved now, because we believe that we'll get a re-rating over the course of the next months and years. And that's what we believe. Now, it's not investment advice. We're not telling anyone, but we think we're in a good spot, and we think it's a good story.
Great. Well, thanks, Bruce, for taking the time and speaking with me today.
Great. Thanks, Marilyn. It was enjoyable to talk. Thanks.
And thanks, everyone, for watching. Join us again next time for another engaging conversation on CEO Insight. If you like this video, make sure you subscribe to our channel and turn on notifications so you don't miss future updates and interviews. See you next time.